The Bank of Canada has just cut interest rates to give the economy a much-needed boost. Now, before you panic and think this is the financial equivalent of hitting the eject button, let's break it down. Spoiler alert, it's not all bad news, unless you're hoarding cash under your mattress, in which case, maybe rethink your financial strategy. Interest rates are like the thermostat for an economy. Too high and things cool off quickly, too low and the economy heats up. Right now, the Bank of Canada thinks we've been sitting in an economic cold snap, so they've turned the dial down. Basically, they're trying to get everyone moving, spending, and borrowing again. Think of it as giving the economy a nice cup of coffee, strong, hot, and enough to keep it awake through the tough times. Now here's what the rate cut really means for you and me. If you've got a mortgage, congratulations. Your monthly payments might shrink, and you can finally afford that extra guac at Chipotle. But if you're saving money, well, you might not be jumping for joy. Lower interest rates mean lower returns on your savings. So, if you were dreaming of retiring early with just your savings account, you might want to rethink that dream, or at least pick up a part-time gig. The Bank of Canada doesn't just cut rates for fun, though. This is a calculated move to counteract a slowing economy. They're essentially saying, hey Canada, let's make money cheaper so people and businesses start spending and investing more. It's like a store offering a 50% off sale to clear out inventory. But instead of TVs or toasters, the product on sale is, well, money. Let's dive into why this is happening. Inflation in Canada has been lower than expected recently. You might have noticed that your grocery bills are still high, but inflation is about the overall rate of price increases slowing down, not prices coming down. So, when the bank sees inflation dipping below its target of 2%, they start worrying. A little inflation keeps the economy healthy. Too little inflation, and things can spiral downward faster than you can say, where did my retirement fund go? On top of that, global economic uncertainty hasn't been helping. Between international trade tensions and fluctuating oil prices, Canada's economy has been feeling the pinch. This rate cut is the bank's way of saying, don't worry, we've got this. Probably. It's like when your friend assures you they can handle cooking for a dinner party, but burns the appetizers. Let's just hope the main course turns out better. For businesses, this rate cut is like being handed a discount code for borrowing. Lower rates mean it's cheaper for companies to take loans to expand operations, hire more staff, or invest in new projects. The goal here is to stimulate growth, create jobs, and boost consumer confidence. After all, if people feel good about their finances, they'll spend more. And what's better for the economy than Canadians out there buying maple syrup and hockey sticks? For homeowners, especially first-time buyers, this could be good news. Lower rates often mean more affordable mortgages, and that could help ease the pressure in Canada's pricey housing markets. Then again, if everyone starts rushing to buy homes, prices might spike even higher. It's a delicate balance, kind of like trying to eat poutine without spilling gravy all over yourself. But hey, this could be your sign to explore other investment options. Maybe it's time to dip your toes into the stock market. Just, avoid putting all your money into meme stocks. Learn from 2021, people. The big question is, will this rate cut work? Well, it depends. If consumers and businesses take advantage of the lower rates responsibly, it could lead to more growth and job creation. But if people go overboard with borrowing, it could lead to higher debt levels and financial instability down the road. It's a fine line, and only time will tell if this move will help Canada's economy recover. One thing's for sure, the Bank of Canada isn't afraid to take action. Love it or hate it, rate cuts are a tool they use to keep the economy on track. So whether you're a homeowner, a business owner, or just someone trying to make sense of all this, the takeaway is simple. Pay attention to what's happening, and make financial decisions that work for your situation. Thanks for tuning in. Whether you're celebrating cheaper loans or mourning the loss of savings account returns, remember, there's always a way to make the best of any economic situation. Got thoughts on the Bank of Canada's rate cut? Share them in the comments below. Let's keep the conversation going, because like interest rates, we're all just trying to balance things out. Don't forget to like, subscribe, hit that notification bell for more updates on the economy, finance tips, and of course, my occasional attempts at humor. Until next time, stay informed, stay smart, and hey, maybe treat yourself to that extra guac. You've earned it.